I'm Brian Beaulieu from ITR Economics. Thank you for joining me for this edition of FedWatch. Today is January 5th, 2024, and we have a lot to look forward to in 2024. Really, there are 4 points I want to cover, and the conclusion to those 4 points is it looks to us like we're still on track for getting the interest rate reductions that we've been forecasting in 2024. One of the data points, if you will, is the Fed minutes from their last meeting really show more clearly that they're preparing the marketplace for a decline in these interest rates. They're using terms like impressive disinflation, concerned about over tightening in terms of quantitative ease tightening in light of a potential risk in the labor market. Their dual mandate is, of course, full employment and low inflation, and now they're actually talking about needing to balance those two things, which is very healthy in our view. And they actually said they need, in a typical bureaucratic way, right? They said, we need to begin to discuss at what point we will think about reversing our quantitative tightening. And I probably threw in one too many qualifiers there, but the point is, it's the first time that they've actually brought up the topic of reversing course in terms of QT. And you'll see that from their not rolling so much off their balance sheet. They'll probably stop doing that. And they're getting some signals that it's time for them to be doing that, which is marvelous. One of the signals that we can see, and I talked about it in the executive summary of the trends report for this month, if you are a subscriber to the ITR trends report, has to do with the money supply. And there's a shift going on in the money supply. And it's too early to declare it a real cyclical shift away from tightening. We won't know that for sure, statistically speaking, until March or April. But it sure leans us in that same direction of they're shifting gears here a little bit. We still think we're on track for interest rate reduction in the second quarter. Still not thinking they're going to move in the first quarter, but the next couple of data points could suggest that they're going to move earlier than 2Q. The third data point that I want to talk about is that job openings are down 18, almost 19% year over year. And while they're still running high relative to long-term history, we're running about 8,140,000 job openings right now. That's down 30%, a little over 12 million job openings at the height of the Great Resignation that goes back into 2022. So we're running about 3 million jobs more than we typically do in terms of job openings, but a significant drop, and I think that has caught the Fed's attention. And the last data point that caught my attention this week is that the quit rate has come way down also. In fact, we're running at about 1.8% quit rate right now. And I looked at the 10-year average pre-COVID, and it was 1.877. So we're running about average quit rate. And that's got to be appealing and comforting to the Fed also in terms of easing off on the labor inflation, which has been one of their main sticking points. So between the job openings coming down so significantly and the quit rate leveling off, I think we're likely going to see that money supply continue to swing in the other way, and we'll get the Fed moving into probably not quantitative easing, but at least they won't be tightening anymore as we head into the second quarter. All of that is good news. For some, it's not good news for others. I don't like qualifying news as good or bad. But if you're rooting for interest rates to come down, it's good news for you. If you benefit from interest rates staying high, it's not so good news for you. But it's just the trend. And what you do with it is figure out how you make money from it. The trend in 2024 is, from our view, we're going to be seeing some mild easing in interest rates. Figure out how you can make that work best for your company, and you can make some more money in 2024. Thanks for watching this edition of FedWatch. We'll see you next week.